Okay, so yesterday was a wild ride. We saw the biggest single-day move in oil since the war kicked off. Brent crude absolutely plunged, settling below $100 for the first time since March. The White House is hinting at talks with Iran. Tehran says, no way. So why did the market just crash? Let's get right into it. Yeah, look at that number, down over 10%. That is the single biggest one-day drop for Brent crude since this whole conflict started. It's a massive move, and honestly, it has completely flipped the market narrative like overnight. So what in the world drove this plunge? Well, it all kicks off with this 5-day clock. On Monday, the White House said it told the military to hold off on planned strikes against Iranian infrastructure. But the reason they gave, that's where things get really interesting.
I mean, the disconnect here is just unreal. The administration is out there claiming its envoys are having these constructive conversations with Iranian officials. But Tehran's response? It was immediate, and it was blunt. They basically said, quote, there are no talks, and called the whole thing a tactic just to push down energy prices.
And this perfectly explains a key market idea: geopolitical optionality. The market doesn't actually need a signed and sealed peace deal. All it needs is the possibility of things cooling down. Just the chance that talks might be happening was enough to wipe out a huge piece of that war premium from oil prices. Right, so this is the crucial point. We are now in this 5-day window that's been set. It goes until Saturday. What happens between now and then? That is the single biggest macro variable on the board this week. If we don't hear anything by Thursday, you can expect that pressure to build right back up. And that geopolitical angle flows directly into our next critical story: oil actually breaking below $100. And look, this isn't just some number. It's a development that could change the entire economic story. There it is, $99.94. That was the settlement price for Brent. And that marks the very first close below that huge psychological $100 level since all the way back on March 11th. And just look at this swing. I mean, at the absolute peak of the Hormuz panic, Brent was up over $119. So we're talking about a nearly $20 collapse in just 10 trading days. It is a dramatic reversal, and it has caught a lot of people completely off guard. And here's why this matters so much. For the past month, really, the whole market story was built on this one single fear: that a massive oil shock was going to cause persistent inflation. That fear, that's what kept the Federal Reserve completely on hold and made any talk of rate cuts feel like a fantasy. But if oil can genuinely stay down in the $90 range, that whole inflation story starts to crack. It gives the Fed some critical breathing room. And that statement from Fed Chair Powell back at the March meeting that the crisis might only have temporary effects, well, suddenly that goes from just being cautiously optimistic to looking incredibly spot on. Okay, so while literally everyone is glued to their oil tickers and watching for headlines out of Tehran, there is another major macro event happening this week that I think the market is really underpricing. This Thursday, March 26th, the European Parliament is holding a critical vote. So what's at stake here is the ratification of the EU-US trade deal that was put together last July. The terms are pretty simple. The EU gets rid of all tariffs on US industrial products, and in return, the US puts a 15% tariff on goods coming from the EU. The whole point is to de-escalate things. But of course, there's a catch. While the committee did approve the deal, EU lawmakers stuck in a really critical amendment. It basically requires the U.S. to formally confirm that it still honors the original terms. They're looking for a guarantee that any new proposed tariffs won't just override this agreement. So Thursday's vote is the real test. So, with all of that in play, let's just wrap up with a quick coda. Here are the 3 signals you absolutely need to be watching on your terminal for the rest of this week. First up, watch Tehran, not Washington. Iran doesn't have to come out and announce formal talks. What you need to look for are any statements, even really indirect ones, from the known message brokers. Countries like Egypt, Pakistan, or Turkey. Any tiny signal of back-channel contact will immediately rewrite the narrative for oil. Second, the number 100. That is now the absolute line in the sand for this market. I cannot overstate how important that level is right now. The outcome here is totally binary. If we're below 100, the story is all about inflation relief and giving the Fed flexibility. But if it breaks back above that line, the panic trade is back on, and the Fed is frozen once again. That is the level to watch. And third, you've got to keep an eye on Brussels. Yeah, the vote is on Thursday, but the key signals are going to come out today and Wednesday. You want to watch for any statements from members of European Parliament, from the U.S. Trade Representative, or really any official word from Washington on whether they're going to accept that amendment.
So it comes down to this: 5 days. That is the window. Saturday is the deadline. Between now and then, it is all about oil, Tehran, and Brussels.
And that leaves us with the central question for this week, doesn't it? The markets are trading on the possibility of talks, while Tehran is flatly denying they exist. So in that huge gap between those two realities, where does the real risk and maybe the real opportunity truly lie?